Assalamualaikum warahmatullahi wabarakatuh. Today, my name is Muhammad NURHAKIM bin ISHAK, and today I will present about a company profile, which we begin with Samdarbi. Samdarbi is a renowned multinational conglomerate headquarters in Malaysia, boasting a rich history that track back to 1910 with a diverse portfolio spanning various sectors including plantations, property, healthcare, industrial, and so on. Samdarbi has established itself as a key player in the global market. Its operation extend beyond Malaysia with a significant presence in another country, making it one of the largest and the most influential company in the region. So, for this part, what is MFRS8? MFRS8 is operating segment, guide how entity with a public equity or debt disclose segmental financial information in their reports. The aim is to provide insight into the different business activity within an entity, helping other users understand performance, risk, and return in each segment. What about defining operating segment? An operating segment is any part of the business that generate revenue or expense, has regularly reviewed result by the chief operating decision maker, like the CEO or senior management, and has holistic financial data. Now, accounting policy related to MFRS 8. So, reportable segment. Only segment that meets specific threshold, for example, 10% of total revenue, profit or loss or asset need to be reported. If reportable segment do not cover at least 75% of total revenue, additional segment must be disclosed. What about disclosure requirement? The standard require detailed information on the revenue, profit, asset, and any inter-segment activity for each reportable segment. Additional disclosure on the geographical areas and the major customer are also necessary when relevant.
Assalamualaikum warahmatullahi wabarakatuh. My name is SHARIFAH MARZUIN SHAZIERA. So now we have the chief decision making and the responsibilities. First of all, the chief executive officer for Samdarbi Berhad is Datuk Jeffrey Salim Davison, which is responsible in setting the economic strategic plan and direction, engage with various shareholders and investors to build trust, grow organically through the expansion of dealership network, and also expand the business around the world. He also responsible in providing strong leadership by effectively communicating business strategy, also ensuring all decision reflects to its environment, safe and health intention. Also engage for the finance function of the division's regional operation in Malaysia, and lastly, report to the board on safety and sustainability matters. Next, we have the Chief of Decision Making for Nestle Malaysia Berhad. The Chief Executive Officer for Nestle Malaysia Berhad is Mr. Juan Arnolds. He is responsible in setting and executing organizational strategy, making capital allocation decisions, communicating effectively with all stakeholders, responsible of business activity, identify existence of manager, responsible in establishing policies, guidelines, and strategic objectives, as well as providing leadership and direction for quality management. Next, we have two types of segments, which is business segments and geographical segments. Business segments divided into 5 categories, which is industrial sector, motor sector, healthcare sector, logistics sector, and other sector. While geographical segments including various locations where Singapore, Thailand, South China, and Australia. Next, we have the segmental reporting. Segmental reporting reveals about the company performance, which include strengths, weaknesses, and opportunities. For example, if one segment consistently outperforms others, it may indicate a competitive advantage or an area of potential growth. Furthermore, it helps investors, managers, and regulators understand which one are doing well and which one need attention. This detailed view allows for the better decision making and oversight. Moreover, helps to understand the company's strategic priorities, resource allocation, and potential risks. Next, these are the segmentary reporting for Samdabi Berhad for the year 2023 and 2024 respectively. Industrial and motor show a positive result in the year 2024, which continue to report positive result amounting 50,897 and 31,253 respectively.
Now, it comes to the key benefit of segmental reporting for financial statement user. So we begin with Samdabi Berhad. First one, focus on two business, motor and industrial. Despite the uncertainties and challenge experienced in the last several years, Samdabi Berhad has consistently achieved strong financial and operational result. Samdabi also has built a solid foundation for the future success in two core business while pursuing a new avenues for value creating and competitive advantages. So the last one, to strengthen and expand the business, Samdabi Berhad has strategically diverse non-core business and asset reinvested and proceed with their existing operations, operational asset and acquisitions. For performance evaluation, allow a stakeholder to evaluate the performance of individual business segment more accurately. This targeted evaluation can lead to more strategic resource allocation and better overall performance. Risk assessment and management. Segmental report helps in assessing the risk profile of each business by providing detailed information about each segment. Stakeholder can better understand the risks associated with each part of the business and manage them more efficiently. Next is enhanced transparency by breaking down financial data into a segment such as industrial, healthcare, motors, and logistics. Stakeholder can see how each segment contribute to the overall performance of the company. It helps investors and analysts make more informed decisions about the company operation and the growth potential. So the next one is a better decision making. Detailed segment information allows stakeholders to assess the risk and return associated with the segment itself.
Next, I will explain about MFRS 134. What is MFRS 134? MFRS 134 or Interim Financial Reporting is a standard in Malaysia that guides companies on how to prepare and share the interim or short-term financial reports, like quarterly or half-yearly statements. The goal is to make sure these reports are clear, reliable, and give an accurate snapshot of the company's financial health and activities over that period. It also requires companies to stick to the same accounting methods they use in their full year reports, so the information remains consistent and trustworthy. For two significant events and transactions that affect an entity's financial position and performance since the end of the last annual reporting period are the first one, acquisition or sale of major assets, and the second one is issuance of new debts or equity. So the first one is acquisition or sale of major assets. When an entity acquires or sells a major asset such as a property, equipment, or even a subsidiary, this transaction can significantly impact the financial statements. An acquisition increases asset and may lead to a higher depreciation or amortization expenses. Conversely, selling an asset might bring in cash and potentially a profit or a loss, both of which affect the company's income and cash flow. For the second one, issuance of new debt or equity. If an entity issues new debt such as bonds or loans, or equity such as stocks, it can affect the financial position and performance. New debt adds to liabilities and interest costs, potentially raising the company risk level. Issuing new shares can dilute existing ownership, but it also raises the funds for expansion or other needs. Both actions can influence the company's financial ratios and related to debt and liquidity.
Here, I'm going to tell you the comparison of the interim reporting periods for both current and comparative interim financial statements. Okay, the quarter that is taken to make the comparison is the fourth quarter, which ends on 30th June 2024. Here in the report, for statement of profit or loss, the reporting period is compared between the fourth quarter and the previous year quarter. The date for the quarter is 30th June 2024, compared with the previous fourth quarter on the same date, which also ends on 30th June 2023. For statement of comprehensive income, it follows statement of profit or loss, which the date for the quarter is 30 June 2024, compared with previous fourth quarter on the same date, which also ends on 30 June 2023. Next, for statement of financial positions, the comparison of interim date report are presented between quarter ended and accounting year ended, since some there be accounting period and on 30 June each year. Therefore, the fourth quarter, which ends as at 30 June 2024, compared with previous year ended on 30 June 2023. For statement of changes in equity, we use the quarter date, where we compare the interim report period between 30 June 2024 and previous year on the same date, 30 June 2023. Lastly, for cash flow statement, it is also the same. The current year quarter is 30 June 2024 compared with the previous year quarter on 30 June 2023. That's all from me.